We're fucked. Just kidding. Just kidding. We're not fucked yet. I'm live on YouTube. I'm trying this because before, when I had my shitty computer, I wasn't able to actually stream from Discord and go live on YouTube at the same time, but I'm pretty sure I'm going to be able to do both now. And for the record, I do not have sound right now, so just keep that in mind. So I'm going to go ahead and share here from Discord. Let me make sure that the Discord's muted. Okay, it is muted, so there's no beeps and shit. But yeah, there's a lot of developments today, man. Holy shit. So like the research process, the first thing I do, and I'm just going to kind of talk here. I'm on a limited time schedule. My wife's out of town. I have the kids by myself this week, so just trying to show how I go about looking at information that comes out. So obviously the first place you want to look is the Fed Register, and there's a couple different agencies to look at, money being one of them, Dodd-Frank Wall Street. This has the relevant ones like the Federal Reserve System, Consumer Financial Protection Bureau, which they're very low in the totem pole, Federal Reserve System again, National Credit, Commodity Futures Trading Commission is very relevant. As far as recent stuff, though, if you want to get that, then you just search by agency. And there's also RSS feeds, too, which we have hooked up to the Discord as well. So you can always look there if you want these filings in the RSS section. The DTCC had this come out today. And it had the capped contingency liquidity facility deadlines come out as well yesterday. Hold on one second. Sorry, I gave the old computer to my daughters, and I'm trying to teach them how to use it, like the keyboard and stuff. So they needed my help with something, so I'm back. Anyways, this came out yesterday, October 10th. This is the it's basically relevant to the GSD rulebook, Government Securities Division rulebook, which is the FICC, and its netting members. And we got a couple of dates on here. We have a requirement to execute and return their certificate by December 1st, and my kid just fell down. Christ, sorry. This is probably a bad idea. Anyways, so we have this one here, and we're having deadlines come out all over the place from the FICC and from the, I believe there was one from clearing today, out of all three of the major agencies, from DTCC and SCC and FICC. And basically, there's phases that are rolling out. It's called Cfm Modernization Initiative. And this was March 4th, 2022, and this was initiated. This notice here was issued, and it gave some dates here as far as the testing for their switchover. Because remember the CAT system? This is a CAT system relevant, and it involves mortgage-backed securities as well. So there's still a lot of can kicking going on with mortgage-backed securities, swaps. I believe the swap deadline is actually December 5th, unless that's changed. But I don't believe I've seen any developments on that changing. There's a lot of stuff that's supposed to expire this quarter, and the question is, are they going to can kick, which they often do? And if they do that, how do you prepare for that? Because I know a lot of us are in SPY calls right now, later dated for this end of this year. The good news is, first you got to understand how options work. If you're holding options later in December, then I'm sure you've noticed by now, if you're holding them, obviously if you would have bought them early on in, let's say late August, then yeah, since then they're going to be down a fuck ton because the markets have been down a fuck ton since then. But if you've been holding them recently and you've gotten your average near the current price, you'll notice they haven't moved much. It's because at a certain point, theta doesn't have very much effect on your option if you're already far out of the money and there's time on the clock. And if they've been beaten to hell, there's only so far down they can go before you've exhausted intrinsic value, and all you're left with is the time value. So you may see a penny or two tick off, a day at a time, but you're not going to see these big, massive, negative 60% drops every day when these contracts get down to the bottom floor. Let's look at SPY real quick. So obviously this is the gap here that everyone's looking at, the 353, 354, and then the COVID. I think this is, no, that's not the COVID gap. The COVID gap, the one that started from the March 2020 stimulus, is going to be your 221. This is where we're at now. But yeah, the question is, are they going to can kick? Well, let's look at these options real quick. Let's go to the 30th here. I just installed this, so I got to reset. Oh, so this might be a good opportunity to show anyone that's having issues with this. So if you want to know how to customize your Webull, like this is the default setting. I just installed this on the new computer. All you got to do is basically just come up here. I'm going to take this off. And I don't like to have all this extra shit on here, like this news and stuff, financials, analysis. I'll keep analysis. Actually, never mind. Order flow is good to have. Corporate action. I like to have just chart options and order flow and volume analysis, really. And to add a widget, you just right-click up here, add a widget, and then you can just search for it, volume analysis. And then you can just drag it and drop it right there. Okay, anyways, this option chart. Let's look at 500. Oh, and to get all the strikes, by the way, you go here. It's really small. It's in the top left corner next to your columns up here. Click that, and then you can customize your columns. Obviously, you want volume. I'm not sure why they default volume to off. Doesn't really make much sense. None of this stuff really matters to me. The size of the bid doesn't matter to me. I like to have the row in there for rate hikes being relevant. And if you like the in the money percent and out of the money percent, it's an option. I personally don't use it, but it's there if you want it. And then to get the strikes, you have it right here. You can choose from 6, 10, 20, 30, 50, or all. Obviously, you want to just grab all of them. So let's look at the 30th real quick, December. And look at the 500s. First, where's the lowest IV? The lowest IV is And see how it's changing right now? I think it changes even overnight. No, I don't believe it did that before. 2330 is at the low? No, 2320 here. 2303. 2302. So your deepest is that 435. So it's, I mean, if you just take into account the numbers, I mean, what's the midpoint? 430. Where did we touch in August? 430. So if they are going to can kick, I would, this relief run that we may see may go to that halfway point, and then they'll can kick the rest of it. It's too early to tell, but that's what it's looking like. But if you look at the option chart in the 500, let's look at that. I need to fix this. And to switch your columns up, you just click them and you can drag it wherever you want. I thought I turned on the volume. It's there. Where is it? Get rid of the last. It's implied vol. The ask. I'm going to move it out of sight. And I'm going to move my volume up close. I like to put the volume like very first row and then the open interest behind it. So we had 340 volume today, and I guarantee they're slowly accumulating these options. This is the chart for it. So these are written back in, and this is what gets me about this, right? Let's just do this. Hold on. If you take a screenshot of this, I know I'm kind of getting on a tangent here from researching, but I wanted to, at least while I had a lot of the group here, to let everyone know that even if they do can kick, there's still going to be a profit opportunity for these SPY positions that we just have to roll out to the next area with them. And there's like a little corridor here as well, which I find interesting. That's about right too, based on the profit. That's cool. They even have is this new? Oh, that's your profit. Okay, never mind. Yeah, okay, so we have a screenshot. Let's go to PowerPoint real quick. And I just want to see. So we have, this is the option 530 call, expiring at the end of the year. And keep in mind, option contracts do have their own TA that you can apply to it in some circumstances, depending on if it's like a 0 DTE, then obviously it's not going to matter much. But if it's got some time on it, then it may be worth looking into the technicals for it. So anyways, that's the contract. Now let's bring up the actual SPY chart. And I got to get the granularity and time frame close as possible. So September is in the middle, with the 24th of March. It's about right there. No, right there. I need to go back and zoom in on that contract. Double bottom. Classic. Oh, that line's in the way. Let's go to 2023. So, I mean, literally, they basically wrote these calls when the market started to dip, right? Because the market, we started reversing literally at the first of the year. And then if we look at those contracts again, they were written on the same day. Like the same day the trend started is the same day they wrote these contracts. And the reasoning why is because they write them, meaning as this goes down, they're making money on the premium. It's going straight into their pocket. And then if there's enough time left on the clock, not only can they ride this all the way down, they can slowly accumulate in this period here, right here. This is your accumulation period. And then we got this pop here that we had the first of the month. I mean, I regret not selling it because I could have been up like, I think it was like 40 to 60%. And I've since this trail back down, I'm still up. I've gained more than I had when I started. but yet the price is lower. I believe it's because there's more demand for them. Because now we have 19.3K open interest instead of the relatively low amount we had a few weeks ago. Alright, sorry, my kid needed some paper. Okay, anyways, that's basically the idea with these options, right? The reason why you go slow and why I recommended going slow to begin with is so that you could let this happen and then you can easily average on the bottom. Instead of going way too fast and averaging on the way down like this and burning up all your capital, then yeah, now the price is here, but you're left with no money because you've already spent it all. That's why you go extremely slow, and you still have exposure as it's going down, just in case you get that crazy run, but you go really, really slow so you can still average down when the time comes, because there's plenty of time on the clock from a theta perspective. And if you look at options specifically, the theta here is going to be less than at the money. So if you were to, let's say you had an in the money call versus your out of the money call for the same expiration, but it's December 30th, you're actually going to lose more value in the money call than you would in the out of the money call because of theta. I know that sounds ass backwards, but it's kind of flip flop. It's the other way around if you have a close expiration. If your shit's expiring in 2 days, then yeah, out of the money's going to get the shit eaten out of it by theta, while in the money's got your intrinsic value. It's just it's always a battle between extrinsic and intrinsic value. So if something's bottomed out but it's got time left on the clock, like those SPX 1DTE calls, like yeah, if today the out of the money price that was 75, 80, 90 bucks 2 hours ago dips down to that 5, 10, 15 cent range, and then you see it flatline on the chart. Let's actually look at it if I can access it from this. I don't know why I cannot look at options on the computer for SPX. But you saw it, I sent in Discord. It literally flatlines because you can't bottom out after a certain point because there's a certain amount of extrinsic value even on a 1 DTE that remains, and if the price is close enough to the money, it's gonna hold, unless you just get that absurd swing that pushes it 2 or 3 levels more out of the money that makes it worthless. Yeah, as far as developments though, this is a pretty big one here. We're just gonna have to keep an eye on this. And there's a lot of back information that goes into this as well. The Cfm system modernization, it's a big deal involving the MBSD. I'll have to explain probably a little bit more about that because it's probably probably confusing a lot of people. And that's the thing. This shit, it is confusing, but it's just a process. It's a lot that comes out. As far as the SEC. I don't know what the fuck's going on with the SFT. They're taking their sweet ass time with that. There's a lot of Office of Management and Budget stuff that came out. This is the FOIA services. Okay, F4. They're getting an extension for foreign issuers to register securities and business combinations, reorganizations, and exchange offers pursuant to federal securities laws. They're getting an extension on that. Soon dated October 5th. Is there a date on this? This was filed the 11th at 8:45 a.m. The publication day won't be until tomorrow. That's the thing with the Fed Register. All this stuff here, this is public fucking inspection, right? But then you go look at these papers, 7-page views today. This one's an extension for Form S4. And this is more business combination securities exemption, or extension rather. And then the public may view background documentation for this information collection at the following website. Now, this is how they get shit past you because no one reads it. It's a daily process. Form F4, we already looked at that one. Let's look at this one. Form F7. This is Form F7 is a registration statement used to register securities that are offered for cash upon the exercise of rights granted to a registrant's existing security holders to purchase or subscribe such securities. Okay. What else? That's what we just looked at. Form F1 is a form that's used by certain foreign private issuers to register securities, and they're getting an extension on this one. So that's the OMB. More extensions. MEMX got a filing today. We got notice of filing and immediate effectiveness of a change to amend the exchange's fee schedule. So if you ever see anything related to fee scheduling, it's going to be market share related. It's going to be dark pool, market share, order flow, competitive market. I guarantee if I type in competitive, it's going to be in here somewhere. Yeah, the exchange first notes that it operates in a highly competitive market. Because I've been doing this so long, you know, these filings, they all blend together. Like you'll know what, based on the title, what a lot of this shit has in it, because a lot of it's repeated language. That's why you don't want to look at what's the same in all the filings. You want to look at what's different. But yeah, this is a very common occurrence in these filings, is this exact quote. The exchange first notes that it operates in a highly competitive market in which market participants can readily direct order flow to competing venues if they deem fee levels at a particular venue to be excessive or incentives to be insufficient. More specifically, the exchange is only one of 16 registered equities exchanges, as well as a number of alternative trading systems and other off-exchange venues to which market participants may direct their order flow. Based on publicly available information, no single registered equities exchange currently has more than 16.5% of the total market share. That's a common fucking paragraph that you will find in these fee schedule filings. Sorry, my kids are being very difficult today. Okay, so that's this one. Just a fee schedule, market share related. They're trying to get more order flow, and they're trying to incentivize more volume into the exchange. That's a very common filing. Next, NASDAQ PHLX. This is notice of filing and immediate effectiveness of a proposed rule change to temporarily waive certain port-related fees. Again, fee-related, but since this is port fees, it's going to be the same. It's the same language, but it's a different way they explain it. This is the other alternative to the competitive market, or they may actually have the same one. Let's see. Basically, the same underlying narrative, right, or the same reasoning for the filings. Let's go ahead and look at it, though. The purpose of this one is to provide a temporary waiver. So think waiver for the newly added ouch order entry ports. And we went over ouch. Actually, I think I added it to the Discord dictionary. Dictionary. Or not dictionary, but define/define. Ouch. Yeah, ouch order. The ouch order entry protocol is a proprietary protocol that allows subscribers to quickly enter orders into the system and receive executions. Ouch accepts limit orders from members, and if there are matching orders, they will execute. Non-matching orders are added to the list or to the limit order book, which is a database of available limit orders, where they are matched in price time priority. Ouch only provides a method for members to send orders and receive status updates on those orders. So that's what an ouch is. Because remember, everything has a definition in the market. Everything works a certain way. There's no fucking magic in the market. There's no fairy tales. There's no getting rich magically. That shit does not happen here. You will get fucked if you're not aware of what's going on. Period. So they're given a 30-day waiver of this ouch order protocol port fee for up to 5 newly added ouch ports with the updated version of the ouch order entry protocol. The fee waiver would be offered for a 3-month period beginning on October 10th, which was yesterday. At the end of the 3-month period, users would no longer be eligible for the waiver. The user may only receive the 30-day waiver once per port, up to a maximum of 5 ports within the 3-month window. The exchange proposes this temporary waiver to encourage new, prospective customers to adopt and returning customers to migrate to the updated version of the order into protocol. So they're trying to get more usage out of this shit. Okay. So they got that for 30 days. It's going to be 3-month basis starting at the 10th, which means it will likely be in effect tomorrow because it's on the public inspection for tomorrow. The reasoning why, you'll always find the reasons why they're doing the filing in the statutory basis. So if you're ever reading a filing and you just don't know what the hell they're talking about, look in the statutory basis. That's a good place to get clues. The exchange proposed changes to the fee schedule are reasonable in several aspects. As a threshold matter, the exchange is subject to significant competitive forces. Here's that competitive text again. In the market for equity securities transaction services that constrain its pricing determinations in that market. The Commission and the courts have repeatedly expressed their preference for competition over regulatory intervention in determining prices, products, and services in the securities markets. In Regulation NMS, which is another fucking thing that hasn't been finished in like almost 2 decades, while adopting a series of steps to improve the current market model, the Commission highlighted the importance of market forces in determining prices and SRO revenues, and also recognized the current regulation of the market system has been remarkably successful in promoting market competition in its broader forms. So you see here, this one here. The NASDAQ's saying, okay, the SEC has been successful in promoting market competition. But then over here, in the other filing we just read, you see that no exchange possesses more than 16% of market share. So you can't have it both ways. It's either the dark pools eating up all the market share or the lit markets are. Right now, it's the fucking dark pools. And it has been for some time. And the way you can see this yourself is go to SIBO market share graph, and it will literally show you. And they need to update this shit because it's just apparent as fuck. Like the whole market issue is clear as day just by looking at this chart. And these right here, all these little check boxes, these are the 16 SROs referenced in the filing. I'll check all of the lit ones first. Then we'll go into the unlit ones. So the lit exchanges. You have Investors Exchange, Members Exchange, PSX, ARCA. FINRA NASDAQ TRF is not a lit exchange. SIBO BYX, SIBO EDGA. Long-term stock exchange is like basically on the veer of death. So I guess we'll include it. Let's skip that one for now. We're at 4, 5, 6. NASDAQ 7. NYSE floor is 8. NYSE Chicago 9. SIBO BZX is 10, SIBO EDGX is 11, NYAX Pearl 12, NASDAQ BX 13, NYSE American 14, NYSE National 15, and then yes, I guess they are still considered a stock exchange, and number 16 would be the long-term stock exchange. So this is your lit competition. If you go back as far as this graph can go, which is it looks like right around when all the LIBOR transitioning really started to rev up back in 2017. You clearly see here that from a lit market perspective, your bottom candidates here are going to be the PSX from NASDAQ, long-term stock exchange, which again has 0 fucking market share, NYSE National, NYSE American, basically everything except SIBO EDGX and NYSE ARCA gets pretty decent market share, NASDAQ and the NYSE floor. Those are your biggest lit exchanges. But you see, looking at the line chart, this here, which is your NASDAQ, your NASDAQ has dominated the market share from a lit exchange perspective since when? Right around here, which was SLR, March 23, 2020, slightly before SLR was implemented. This is when all the stimulus checks are coming out. That's when you see this deviation from what's the yellow one here? This is going to be your NYSE. Let's go back a little bit more. And I swear, if you just look at 2020 and between March and August is such a critical time in the markets. NYSE's market share just takes a nosedive right around that time, while the NASDAQ spikes. And this is why I've been saying the NASDAQ is the heaviest index of the three. If you see a red day, you'll see the NASDAQ down more than any other index, and if you see a green day, NASDAQ's usually up more than any other index. because they're weighted heaviest. They got the most dog shit in them because China, man. It's all China. They got all the Chinese ADRs in there. So now let's add in the non-lit feeds or non-lit exchanges. So this is the competition with lit exchanges, but hold on. Let's add in the Carteret. Holy shit. Where'd the competition go? Yeah, it didn't exist ever. That's right. Let's add in the ADF. Oh shit. Yep, still no competition. That is not competitive whatsoever. And when the claim in the filing about the 16% market share, that's for real, because if you look at this, look at the number one lit exchange market share. It's right at 16%. So these filings have fucking merit. They actually describe and define what's happening in the market, why shit works in the market, how it's going to work in the future, how shit is changing in the future. And you know, there's so many moving parts. That's why I don't buy any of this guru bullshit that's online where they sit around all day and they jack off on live streams just watching news clips and shit. Like you're not ever going to get anywhere. I mean, you may, but it's not going to be as far as the market. You may make a killing on gullible people's time. That's fucked up. That's the shit that needs to stop. Because I mean, if we all stop doing that, people may learn a lot more, a lot quicker. But yeah, all this shit can be seen. Like we just looked at a filing, saw what they said, came to here, which is not even the same exchange that filed it, and we can see that oh shit, they're right. There is no exchange with more than 16% market share that's lit. And then you look at the ADF and you say, oh shit, well maybe that's why they're doing it, because you have two entities here, TRF and the ADF, which according to the fucking SEC lawyers, ADF is, it's not used. We just haven't updated it. Like bullshit, dude. It's used. I see the order flow. But yeah, that's not a competitive market at all. So yeah, they're getting temporary fee waivers on ouch orders, which are the newly added orders to this exchange. And they're wanting users to test it. And the temporary fees waivers would encourage users to test and adopt the enhanced ouch order entry protocol. That's basically it for that one. But yeah, I mean, your friends, to find out what the hell's going on in this market is this shit. And this shit. Fed and the SEC. The two. I'm on the Fed and the SEC websites more than any other website looking at shit. Oh, by the way, while I got everyone here, I wanted to test how much faster this computer is, because I wanted to download the whole list of alpha query tickers, because remember when I would do it before, it would take me like 5 minutes to load the data. I want to see how much faster it is. Let me go to the file real quick. So I want to show anyone that's new to the group how to do that, because since we all have access to alpha query, I wanted you to. It's a really great trick to find some anomalies in the market. No, not that one. Might as well. There's just a lot of extra characters in it. So this is your market data dashboard for the Fed. You got everything under the sun you could want to look at. You got the EFR or EFFR, the effective federal funds rate, overnight banking rate. You got your general collateral rate, your system open market account holdings, your data releases, surveys, reports, all this shit. It's all relevant. Your repo operations, securities lending operations. You have your research. You have your, all this shit is, they're literally trying to tell you what they're doing. And they are doing what they are saying they're doing. It's crazy. All you gotta do is read it and understand it and follow along, and be patient. Because I mean, again, like they don't even know what the fuck's going on. They're only seeing a quarter at a time right now, which is unlike the Fed. Usually they have a longer outlook, forward looking. But right now, given the circumstances, they don't have a lot of forward looking at all. So it's one step at a time right now. But anyways, let's look at Excel real quick, and I'm gonna get off here because I gotta get dinner and shit for my kids. But yeah, I want to start trying to help people learn this shit more, since a lot of people are breaking away from that hive mind mentality. Like, It's a crazy market, but it's actually a very interesting thing to learn about. There's a lot of moving parts that you'd be blown away if you knew how certain shit really worked and operated, and things would maybe make a lot more sense to you. Okay, so that's a good sign. I'm gonna go ahead and delete all these extra fucking characters. I don't think it will take. Oh, whoops! Don't think it will take that. Let's see if that worked. Okay, so I'm gonna pop this into Alpha Query, and Alpha Query. Oh, I'm not showing it for YouTube. That's funny. Wow, I told everyone I'm retarded. You can't say anything. I tell you I'm retarded all the time. Sorry, everybody. But anyways, this is the Fed market data dashboard. Isn't it sick? This is the graph I was talking about. Damn, that sucks. All my best shit, I always do something stupid like that. Here, let's start over with this. I'm going to redo this. Okay, so the filing I looked at. Let's go to the Fed Register. My bad. Okay, so this is the Fed Register. If you go to fedregister.gov, this is it. And then where you go from here, is the Dodd-Frank Wall Street Reform. That's a good place to go. Then you can just scroll down. You'll find all your important money agencies. SEC, obviously, you can just save this page as a one of your pages here on your toolbar. And then you get daily filings that come out with moving parts, relevant shit that is actually meaningful and has bearing on the market and what happens in the market, and institutional decisions, things like that. This is your public inspection. This is filings sitting on here in public inspection, and public meaning you and me are allowed to go and read it and have comment on it. And as you can see here, 7 page views on this one. 4, the NASDAQ PHLX, which is going to waive certain port-related fees at Equity 7 Section 3, which is a rule for the exchange. That's one of them that we looked at. The other one that we looked at is the MEMX LLC filing right here. And this one is involving the exchange's fee schedule. And what I was saying before is whenever you see fee schedule in a filing title, it's usually going to be immediately effective. And whenever you can just hit Control F, look for the word competition, and you will see that the exchange first notes it operates in a highly competitive market in which market participants can readily direct order flow to competing venues. They're basically saying, fuck, there's a lot of dark pools, they're taking a lot of market share, and then it reiterates right here, more specifically, the exchange is one of only 16 registered equities exchanges as well as a number of alternative trading systems and other off-exchange venues to which market participants may direct their order flow, based on publicly available information, which I think it's funny that they include that. No single registered equities exchange currently has more than approximately 16.5% of total market share. Then you go to SIBO's market share graph, you check all of the lit exchanges, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Look at the market share graph. What does the top one have? It's purple, 16.12%. Very fucking close to the filing that said 16.5. Literally rounding up, you're about right there. That's how you can literally link this shit to things in the market. Okay, so and then this is the lit exchanges. You see how the NASDAQ basically towers over everything else, and when COVID started in 2020 and the stimulus checks went out, you see a big dip in market share, not only from NASDAQ or from NYSE, but a lot of others down here as well. But the main thing to note is that the NASDAQ jumped up. Why is that? Fucking China. What extra baggage are they holding? All of the China ADRs. That's why you see NASDAQ tilted heavy on down days and up days. So that's the market share graph. This is a very important website to look at. And since when I first started covering this last year, it was around I want to say May of 2021. You know, we've gone up since then from market share. So these filings have been working just at a very slow pace. That's the market share graph. And sorry about not recording. I mean, I am retarded. I am very sorry. Okay. Okay, so data table. I'm going to take this spreadsheet, and this is for anyone in the group that wants to learn how to use this trick for alpha query. Oops, I got to delete the equal sign. Hold on. Is there any other gay characters in here? And then you literally just, I shared this link. I'll share this again right now, so everyone will have it. It's going to be titled "Every Ticker in the Market." But before I share it, I do need to adjust it because I just remembered this will not work unless you add a comma at the end of all of the ticker names. So anyways, let's go up here. I'm going to go ahead and make a table out of this. And then I'm just going to make commas at the end. Spill, you bastard. There we go. Okay, so there's the spreadsheet. Now it's formatted correctly. Paste the values. There we go. Okay, so now you got all your tickers. So all you gotta do whenever you want to come in and just copy and paste this, all you gotta do is, god damn it, just come in and highlight it all, and it'll be the first table that you see. Huh? Excel, what are you doing? Oh, whoops. That's why it wasn't working. I hate when it does that shit. This computer's so much faster that it's almost like I don't know what to do with myself. So fix this. Jesus Christ. And I'll put this tickers. There you go. Now I can share it. I'll put it in the group chat, and I'll put it in for YouTube chat as well. Here we go. Oh, wrong channel. Oh, there's people in here. Sorry, I can't hear y'all. I'm setting my speakers up later, I promise. What is this? No porn in the Discord, guys. Just kidding. You can do porn. Where's YouTube chat? I've lost you. Where did you go? Am I even live on YouTube now? Ah, fuck it. Sorry, YouTube chat. I'm retarded. I can't find you. Just come sign up for a free trial and you'll get it that way. Just exploit us. Anyways, okay, so I'm going to paste this now into Alpha Query, not that. And the reason why you can do this, it's a cool trick because you take literally all these tickers and then you go to Alpha Query and then you paste them all, and then you can literally query whatever data metrics you want, and now you have every ticker in the market to do so. I mean, you could look at sector, industry if you wanted to. I like to look at the put-call ratio, earnings obviously, IV, I like to use the 30-day for puts and calls. RSI is a must. And I was going to look at the Bollinger Bands too, because I don't think I've done that before. I don't really like to look at any of the earnings stuff. And then this is important. There's two kinds of put call ratios. There is a volume and an open interest put call ratio. Most data bots and shit that I've seen, don't act like there's two of them. Like there is, and it's important to know the difference, especially with options. When you're trading options, you definitely want to pay attention to both different kinds, because you have OI PCR and then you have volume PCR, which is a little bit different. Think of the OI more of on the support side, defense, and think of your volume as offense. 30-day. But anyways, you can look at all these data metrics and you can run this shit, and you can get everything in the market. That's the beauty of this. And you can then, if you have Excel or if you have any basic knowledge with Excel, you can pop it in there, analyze the data, and it may pull out an outlier for you surrounding the data metrics you chose and give you a pretty easy play. There's been a few plays that we've done in the group that we've done off of this alone. What was the one? Was it boxed, I think? We found boxed and like it ran like 70-some% the next day. I don't know if that was luck or if that was just, part of the trick. But hey, 70%, 70%. Oh, now this is still taking forever because this is on alpha queries in, unfortunately. But the question is, how fast is it going to paste into the Excel spreadsheet? Yeah, you can put in whatever metric you want. There's a lot of stuff on here to choose from. You got some technical analysis, options data, earnings data, historical volatility. There it is. Okay, so now we're going to go to all. And the export function doesn't work for some reason, which is kind of annoying, but anyways, you just control A this shit when it's done, after you make sure all of them are printed out, and then you just make a new sheet, or I won't make it here. I'll make it in a new one. And just paste it and go from there. Whoops. That's a lot faster, dude. I want to say it took like 5 minutes. Keep in mind, I'm streaming on YouTube right now and on Discord, and I got some other software running as well, and I got the bot running from Discord. Normally my computer would have fucking crashed by now. Damn, it's still not as fast as I would have liked, but it's alright. I'm probably pushing this motherfucker to the limits already. The next time I'll have my speakers, so if any of y'all have been trying to ask questions or talk or anything, I'll be able to answer you. I haven't been ignoring you, I don't have sound. Alright, well, this is taking long. Oh, there it is. Okay. Oh, the reason it took so long is I didn't paste it the right way. You're supposed to paste it with the destination formatting, not the source formatting. It adds in all these extra. Damn, that was quick. Holy shit. Okay. So yeah, that's why it took so long. I pasted it wrong. So now there you go. You have everything that you need right there. You just clean it up right here. Make a table out of it. Boom. There you go. And then you just go back home and analyze the shit. See what's out there. These are outliers. You can literally find core plays by doing this. That's the B band. Let's change it to the RSI. It'll literally, you'll see like 1 or 2 dots up here, and you'll be like, oh, what ticker is that? All you gotta do is you gotta put in the upper B bands here is 433246. And just go 4332. Right here. It is NVR, consumer cyclical. And you go in here and look at NVR. Consumer cyclical. No options. So the B bands are obviously the outlier here, so okay. Huh. A lot of green technical signs from Weeble's AI there. Interesting. But this is just an example. I'm just going through this. I'm not saying you should buy this stock. I'm just giving you an example of how you can use this alpha query to get everything in the market in one fell swoop. Let's look, and you can do specific data too, like I can do RSI and ticker. If I want to just look at just the RSI and the ticker, I can do that. And let's do it with the sector too. Analyze that data. Oh, okay, never mind. Maybe a little bit more than that. So ticker, let's go with RSI and volume for PCR. Okay, Excel, what are you doing? That's weird. I believe this is this analyze data thing. A lot of people tell me they don't know how to use it, or that it doesn't come with their version. I just get it from the Microsoft store and it comes with it. You can ask it questions and shit. You can be like average RSI. The average RSI is 41 right now, across the whole market apparently. I probably should have put in more data metrics so it could have came up with more correlations. But that's basically how to use it. A lot of data at once you can utilize. Oh boy. Yeah, this one's good too for all your Fed stuff. But these two websites here, man, you can learn a lot from the Fed Register and Fed's website. Learn a lot of shit. And these two places right here. Anyways, I gotta run. I got kids to take care of, but I'll be back later. And next time I will have sound, and I won't fucking record a blank screen for like half an hour. Y'all have a good one. Sorry about that, guys.